Hello, welcome back. Today, we're going to be looking at a couple of pairs, doing a little overview. We have new month of June 3rd, and we already see that we're in a bullish cycle. Okay, and if we look on a higher time frame on the 1 hour, it's around the 15-minute right now. We can see that the past 3 weeks we have been in a downtrend. We have a monthly low that we're just trading off of for this current month, or for this new month I should say, and we're having a pullback. Now you want to tell yourself, of course, I want to trade at the extremes. I want to trade at the last week's high or last week's low. And since again we're in the beginning of a new month, I want you to pay attention to your peak formation track sheet. So for instance, or for example, since we've seen that with GU of the beginning of last month, we have a peak formation. So all we have to do is just count 1 week, counter weeks back. So 1, 2, 3, 4. So remember, I want to focus on the 2 weeks on the daily chart. For the first 2 weeks of every month, I want to focus on the daily chart so we can have our peak formation to trade away from. So on the 3rd week of the month, if you don't have any trade opportunities or have a sense of trade direction, 9 times out of 10 out of those pairs that you're following, you're going to have some type of peak formation. And look, on day 1, day 2, day 3, we have our second leg on a Wednesday. Remember the powers of threes. And then you have confirmation for a second position on that Thursday for the ID 50 move to scare traders out. So now all we have to do is count our levels. So peak formation, ID 50 move, straight away, level 1, level 2, and now we have level 3. And this will be our anchor point or new peak formation for this month to be buying. And you know that we look for what in a market cycle? WVVM. W, move to scare traders out. Okay, this could be our second leg of the multi-structure W. So V, M. But this is a higher time frame, so we have a buy bias. Okay, we have strong support down here. We have a pivot point. So if price breaks this pivot point next week, and breaks this consolidation pivot point, I want to see that because I want them to retest this current month low, or last month's low I should say, and give us another buy entry. But the cycle has already started for GU to be buying, because price has done what? From this low to this peak formation, price has gone 355 pips, well over the 380R of 268 pips. So we're definitely in an uptrend. So with an uptrend, we're expecting lower highs and higher lows, and higher highs, I should say. So this peak formation will probably be taken out, and we will probably expect a trend reset. So if we go back down on a 15-minute chart, we see that we're accompanied by valid support. These zones are becoming stronger and stronger. So the more amount of level 1s or level 1 supports, this is telling us that this area over here is going to be strong support, an area that's not going to be really subdued to be taken out by the market makers. But nevertheless, we know that market makers can reverse the trend at will, and it's all going to be depending on their clients' orders and how they structure the market. So it should not come to any surprise to you on that Friday that we have some type of crash, because market makers cannot just keep on buying and buying. They do have to take profit, and I'm not shocked that they took profit well above my selling parameter window. I know, they're going to overtake that, and that's fine. I'm not stressing about that. I did have a buy bias for GU, and I took 2 trades on that Monday and Tuesday, and it was for 50 pips. I don't ever really set my take profit for anything above 50 pips, but if I do, it's just because I felt to be greedy or something like that. Now, this is going to be my bias. That's just for this pair. That's that. So yes, on the 4-hour time frame, on the 4-hour order block, this is not a 4-hour order block. This order block is just for this current time frame reversal. The 4-hour order block is very big. It's bigger than that. Okay. So I'm going to ignore this 4-hour reversal to say, hey, look out for stop highs, even though we have 3 levels of rise, or we have W, V, 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 M. Okay. Even though we have that, I'm still going to have a bullish perception of this. I'm just waiting for market to do what? M, A, W, and then we should be reversing to continue on a bullish trend. Okay. But anything can happen. So we look on the other pairs, US 30. Again, I will do the rundown. We'll look on a higher time frame, and we see that for the last month's price action, we have been going on a downtrend, and we see that price has been in the price box. Market makers have been controlling this price action in the price box until the last week of last month. They had actually broke round numbers and put a double bottom in. Okay. Put a double bottom in. You're probably saying to yourself, what is the ADR of this pair? The ADR of this pair is 1,060 pips. Okay. You just add 2 digits. They like to add 2 digits to this pair, but it's 1,000, and the weekly range is 1,100,000 pips. So 1,115 pips is the weekly range for this pair. Okay. So on the higher time frame, they're just pivot points. But I wanted to focus on the 15-minute chart, and of course I'm going to have a sell bias. I'm gonna have a sell bias because just for the for that market structure, we have to have a retracement of a move like this, and I may just go on a higher time frame to see what's really going on. Probably looks kind of confusing, but it was just showing a big old resistance order block over here. So I do want to see some type of selling, but you see that you have the chance to make about 2,000 pips on a good cycle. So all this right here is just a big old buy order block and a big old sell order block. We just wanted to see what price to do some type of consolidation, even though that's a stop on consolidation, stop hunt, and trend. So let me go back on a lower time frame. Okay. Let me zoom out, and that's that. And that's the thing about indices; they move in a weird way, but it's kind of good because when it's time to trend, it's time to trend. But you don't want to be on the wrong side of that trend. And if you were the type of trader that kind of manipulate yourself, as in you always adjusting your stop levels, you're always adjusting your take profits. Maybe trading indices is not going to be, the ideal for you until you learn to be disciplined. Okay. So with US oil, again, we look on a higher time frame. Let me drop back down because it's kind of hard to really look at. We see week 1, week 2, week 3, week 4. We have our month price action. Price is wanting to be bearish. Price is wanting to test this low. But if we count our levels, 1, 2, 3, we could see that came true. The powers of threes, market crashed. So we have 1, 2, 3, market reverse, W, buy. So I'm expecting still some type of trend move. But hey, what is our 3 ADR? 700 pips. Well, really 70 pips. Okay, so from there to there, let me see. From that high to this low. Okay, market reversed because market went 3x ADR. And the weekly range is 65. Okay, cool. So we suspect still some bullish move because price has not gone 3x ADR yet, even though we're at 50 points, which is 8 points, not pips. Just suspect some type of bullish momentum from this pair. Okay, that's nice. I'm not going to put too much emphasis on this because I'm waiting for 3-day cycles to come true. I'm waiting for price to come at least in this take profit zone for the smart money to confirm that they're ready to reverse. If not, as you can see, they will go beyond this pivot, this weekly pivot area, and set up the reversal area down here. I don't like that because I want to see that happen at last week's high. This will just be considered a weekly type 1 breakout of last week's low. And then we have our multi-daily W structure. So leg 1, leg 2. Intraday, this is fine to trade for a W. You just have to be able to have keen eyes and be able to witness or understand that when they retest the low 2 to 3 times of the current week's low, then you know that it's a reversal, it's a trend exhaustion, and they will go the other way. German 30, it's kind of mimicking the price action of US 30, or I should say US oil. They really didn't go all the way down to the bottom of this zone. They played on the top of it, and that's fine with me. I'm okay with that. You're gonna find setups that resonates to you, in such as areas like this. I just traded GU this week, but I like that. But I wanted to see this price action happen at last week's high. We weren't at last week's high, so it was just a continuation of the downtrend. So technically, I put 30 lots on the Surge Trader trade competition, and I made $40,000. But I held that position. If it was like a real account with my real money, I would have made 600 to close to 700 pips, and that would have been like $120,000 just from one trade. And probably I would have stacked in positions, but I'm just looking for 50 pips. I'm not a swing trader. I'm not really good at swing trading. I'm good at spot day trading. Monday and Tuesdays are my days, and then Fridays I'll look for that reversal. But I didn't trade Friday because last Friday was our day of me getting my account for those 2 accounts for those 2 companies for the competitions. Okay, so Francis 40 played out a perfect. The market makers for Francis 40 played out a perfect take profit zone reversal. So even though we broke out last week's low, they still reversed the market within my set of parameters. Okay, that's fine with me. Maybe not fine with you, because whatever. But once you have these confluences, once you have the retest of the current week's low, support. Murray Math line, extremely overbought. Oversold. This is giving you enough confidence to go in for the buy. And maybe, yes, you have a TDI down here to have the divergence and then EMAs. Me personally, I don't like using those because it's adding too much. I don't need too much strike zones to get me in the trade, even though I'm seasoning this into the strategy. But I know what I'm looking for. I know the pattern trumps everything, like Steve says. So I'm a box trader with Stacy Burke Trading. I like to see price traded within a box, and I know that we should be buying low and we should be selling high. Okay. So the 3x ADR for this pair is 263 pips. The weekly range is about 277 pips. So if I go from this swing low to the swing high, it's about 500 pips. If I go from here, it's about 274 pips. So this was an exceptional area for the buy. And I measure this from here, we're at 189. So I'm not looking for any sells. I'm looking for buys. So price can probably retest down here, but this W, this triple bottom, is going to play out for our peak formation. Okay. But like I said, when Monday, Tuesday comes, we're going to be watching them. We're going to be waiting to see what they do at last week's high and low, and this should give us our swing point to go in for a buy or a sell. So hopefully they'll do this and then to continue up. If they don't take this high over here, then we can expect the bearish momentum to continue to go down on the downtrend. If not, we're going to continue to go up. Okay. SPX, they stayed in kind of in the middle of the range. I didn't really see any setups for our weekly trap for Monday and Tuesday. Yes, we have some type of anomaly over here. So this is last week's high. So yeah, they broke out of last week's high. That's fine. But I had a good bias on GU, so this is why I didn't trade GU. Same thing with NASDAQ. Let me go on a higher time frame. So the 3x ADR for NASDAQ is 645 pips. So let's see, 645 pips. Okay, we're well over that. 300, 645. So I was about over here. Yeah, 630. So price has gone 3x ADR. We have a double top for this current month. Ooh, so hey, this could be a monthly high over here. And we're at last week's high. See that we have a box over here. This is the weekly box. It's in the sticker box for last week. So this may play out as a breakout pullback double top reversal, since we're already at 3x ADR. So I just need a little bit more confluences. Let me look on another higher time frame. Yeah, so we should be selling this pair. So if I have a bias for NASDAQ to be selling or some type of price action structure to be setting up, then that will probably give me confidence on the price action for SPX for them to be selling, because these pairs mirror each other very well. Could say this has a negative correlation. The DAX has a positive correlation with those two indices of SPX and NASDAQ. US oil has a negative correlation overall. Not too high of a time frame. Okay. So that's my analysis for these pairs. It's not trading advice. It's not anything like that. It's just how I see the market and how I use these indicators to help me form a bias. And I've been right. I'm not always right, but when I'm wrong, it's going to be my entries. But I won't say I'm never right. I mean, I'm never wrong about the market direction, but I feel the market, and with these wrinkles, they show nothing but the market movement, and there's no noise. So that helps me, and I have about 3 years experience with with this strategy. Again, so since that pair, what was it? For NASDAQ. So if I suspect that NASDAQ is going to have a monthly peak formation M, I'm going to write that down on here. So I'm gonna write that M, even though it says GU. So if that confirms next week for week 1, right, then I can expect what? All I have to do now is say, well, next week I should suspect an A, and V. The reason why I didn't put a 4th box to represent the 4th week of the month is because I want you to relax. I only want you to trade 3 weeks out the month and relax on the 4th week of the month. So when you wake up at whatever time that you have, scan the high and lows, relax, wait for the vector pushes, 2 V's or A's out of Asia, or trade the start of the stop hunt. You probably say, what do you mean? The start of the stop hunt, which is this. Boom. V, A, and then New York, trade the reversal. Because a lot of people don't know that that's what this strategy is based off. It's really just trading the reversals of the real move of the market. I had a hard time finding that out before I found out about the type 1s, type 2s, type 3s. With the type 1s, type 2s, type 3s, you're trading the market trend. You're not trading the reversal. That's what the strategy is about. Because when the market is trending, the market makers are going to use that to their advantage to manipulate the traders to get their contracts. So this whole time, market can be on an uptrend, but with this strategy, the original strategy, before you didn't know about this type 1s, type 2, type 3s, we were waiting for price to get to display these anomalies at the extremes at last week's high, and then we would take that, and then when you post your trade or your screenshots to whatever Facebook group or whatever Discord groups that you're on, and you wondering why other traders that don't know about the strategy, they're like, why are you trading the wrong way when the trend is up and such like that? And then you have to say, well, smart money's doing this, there's really bigger hands in the market, and they're still laughing at you. And that's why they're laughing at you, because they really don't know, but the strategy kind of teaches you to trade in the wrong way. But now that you know about the beginning of the stop hunts, the type 1s, beginning of the stop hunts, you can actually trade both ways. Okay? So take your time, relax, and put everything to the test, okay? Don't rush to these markets. This is why I came up with that routine, because I got tired of going on these prop firms and stressing, trading every day, getting lucky on certain setups, and and if I make a mistake, it's going to be a mistake at the end of my challenge where I just blow everything trying to hit my mark, before they take my money. But dedicate 3 months in demo, find your routine, find setups that resonate to you, take screenshots of your losses, take notes of your losses, and track your peak formations with that sheet, okay? Because that's going to help you. All right. If you have any questions, let me know. I think after this month or this competition, if I don't win the competition, I'm gonna wind up buying my own challenge. I do want to trade my own money, but I just don't see $500 to $1,000. This doesn't satisfy me. I need an account that has, that got the moolah on it. So when I do get paid, whatever, I'm going to be trading my own account. I'm going to be away for a little while because I'm going to be focusing on that. So until I'll be able to get the funds to open up my own office, and that won't take much. It's only here in Houston to get, a little real estate. It only takes about $500 to get a decent office space, and then I will get a couple of computer screens. I'll get everything refurbished. I'm not gonna buy everything new, stuff like that. I'm gonna be smart about this, and I'm gonna put a little job ad. And what I'm gonna do is I'm gonna have them trade. I'm gonna pay you, basically. I'm gonna pay you to learn the strategy, but you work for me. And the flip side is that while you're learning this strategy for 90 days, you're not trading, you're just watching videos. I'm gonna do you how I learned this strategy, where I just watch videos for 90 days before I even start trading, but I'm gonna pay you. But in the background, while you're learning, I'm gonna be trading a prop firm for you in your name. Okay, so by the time that I put you in demo after 3 days to see that you actually learned the strategy, I'm gonna say, hey, I got you funded, let me take a percentage. And that's that. So by the time that you learn how to trade after the next 90 days, you come to me, you say, hey, Kai, I'm profitable, I'm consistent, give me my account. I said, okay, that's cool. Here's your account. You have $1 million account, or however, I'm going to invest my own money into your own prop firm account. So even if you don't pass, or even if you're not consistent with me, I'm gonna still give your account back and send you on your merry way. If you still choose to stick along with, with the company, with my idea, with my vision, you're still gonna have their account to yourself. But I hope that throughout those weeks, whatever, that you are profitable, you'll donate to the company. I won't, charge you or anything like that. After that, I will just be charging you as you learn. But after that 90-day period, when you're learning to trade instead of watching the videos, I would like to see some type of donation. It's not a requirement, but it fuels the next seat for the next trader. It supports the movement. Okay. There's companies out there they're not going to pay you hourly just to sit there and watch videos 4 hours a day or 8 hours a day, making $14 an hour. Basically I'm paying you $2,000 a month to learn something. So just imagine having 10 to 20 people learning the strategy, and you're paying them, but in the background you're getting them funded with $1 million accounts. So that's $20 million at your disposal. So just imagine those people giving you about $100,000, $200,000 each. You're making bank, and you're doing a good deed. You don't get into heaven doing good deeds, but once you earn your credit in the book of life, once you earn your R, as in you're righteous, those good deeds are going to reflect upon what you'll be able to receive in heaven. Okay, there's 5 crowns to be earned, and I just hope that you get one of them. Okay, thank you. Take care. Stay blessed.